So recently, one lucky guy won the $12.3 million from the Toto jackpot. Congrats, happy for you. Nice. To put it into perspective, with that kind of money, you would instantly jump into the top 6% of wealth in Singapore. That means you'll be richer than over 93% of all adults in the country overnight. Something that most of us will never achieve, even if we were to work our entire life. Now, let's say you are 30 years old now and you decide to quit your job. Even if you spend $18,500 a month, that $12.3 million would comfortably last you all the way till age 85. But even so, there are plenty of heartbreaking stories of people who receive a huge amount of windfall, whether through lottery wins or inheritance, and lost it all within just a few months. That's why in this video, I will share how I would manage the $12.3 million if I've won it, which I didn't, just in case you're wondering. Alright, before I even think about spending a single cent, the first thing that I would do is clear all my high interest debts. And by that, I mean any loans with interest rates above 4%. Things like credit card bills, car loans, personal loans, student loans, and so on. Why? That's because paying off these debts is like getting a guaranteed return on your money. For example, if your credit card charges a 27% interest, clearing it will effectively give you a risk-free 27% return. #girl math. But what about lower interest rate loans, like HDB loans, which have a 2.6% interest? Personally, I wouldn't rush to pay those off. And that's because I would likely be able to earn more by investing the money instead. For example, even relatively safe investments like SSBs or money market funds today can give me around 2 to 3% return. Because of that, I would prefer to let my money grow while slowly servicing the low interest debts. Quick pause. If you are looking for the best brokers to kickstart your investing journey, check out Interactive Brokers. You will enjoy one of the lowest fees in the industry at just 35 cents per trade on the US stock market. It also offers Ireland domiciled ETFs, perfect for saving on dividend withholding taxes. Plus, it also comes with free company research tools, so you can make smarter investing decisions. Feel free to use my Interactive Brokers link to open an account and start investing today. Alright, let's get back to the video. Now, once that is done, the next step is to park the money into high-yield savings accounts. This will allow me to earn a decent return on my cash while still having quick and easy access to it, especially for important things like my emergency fund or any upcoming expenses. As of right now, the three highest yielding savings accounts are OCBC 360, UOB1, and Standard Chartered Bonus Saver accounts, all of which are currently giving around 2.68 to 3.3% interest when I fulfill the basic salary crediting and credit card spending criteria. Not to mention that some banks like UOB1 have ongoing promotions that will give you rewards when you participate in them. But to make things easier for you, I've created the best place to park savings calculator to help you compare which banks will give you the highest interest based on the savings that you have and the criteria that you can fulfill. So for this category, I will be parking $100,000 into Standard Chartered Bonus Saver to earn a 3.05% interest, then $150,000 into UOB1 and $100,000 in OCBC 360 to earn 3.3% interest. That will equate to getting paid $941 a month without even needing to touch the initial capital itself. Now, once I have all my liquid cash and emergency funds set up, the next step is to park my cash into very low risk investments, and that is bonds. James Bonds. First, I will park up to the maximum 200k into the latest SSB. That will give me an average 10-year yield of 2.49%. The reason I want to go for SSB first is because the funds are semi-liquid. This means if I suddenly need the money, I'm able to redeem it and get it back by the following month. Next, I could also probably go for T-bills and SGS bonds. But to be honest, their yields are rather low right now, and I'm quite hesitant to lock my money up just to get 1 to 2+% yields. I would rather wait for the yield to go back up to at least 3+% before considering investing into T-bills and SGS bonds. This is also the same for fixed deposits. I would prefer to wait for better yields as they are currently only offering up to 2.5% return. So what are the low-risk investments I can park my money in? The answer? Bond ETFs, bond funds, and money market funds. For this, there are several options that I can go for. The first one is the ABF Singapore Bond Index ETF with the ticker symbol A35. This ETF mainly invests in government bonds as well as debt obligations that are guaranteed by Asian governments. This means I will get to invest in the same government bonds while having the flexibility to sell whenever I want. and I won't have to individually manage each of the bond. Though of course I won't be able to lock in the rates and there's volatility risk lah. This bond ETF currently has a weighted average yield to maturity of 2.53%. So let's park $1 million into it, and that will give me around $2,108 monthly income. The next one I could go for is the UOBAM Cash Plus Extra portfolio, which currently has a projected yield of about 3.5%. This portfolio invests in a mix of funds that hold government bonds, money market funds, and investment-grade corporate bonds. So let's park another $1 million into it. And with rates falling, I will just assume that it will give me a slightly lower 3% yield, and that will give me around $2,500 monthly income. Lastly, I will also invest in the Endowus Cash Smart Ultra portfolio, which has a diversified allocation across short duration bond funds as well as money market funds. So if I park another $1 million into it, assuming I use a 3% yield, that will again give me around $2,500 monthly income. All these will form our mid-term savings, where we won't need to touch the money over the next 1 to 5 years. At the same time, all these investments are rather liquid. So if we one day find better opportunities elsewhere, we would be able to easily use the funds from here. Next, I'll be parking my money into the best zero-risk investment that can give up to 6% interest per year, and that is none other than CPF, of course. For this, it largely depends if I'm still working or not, because if I'm still working, then I will only top out $8,000 to my CPF MA, SA or RA to hit the maximum CPF cash top-up relief every year. But if I'm not working, then I won't have to bother about the tax relief. In that case, I can max out my CPF MediSave account up to the basic healthcare sum, max out my CPF SA up to the full retirement sum, or if I'm 55 years and older, max out my CPF RA up to the enhanced retirement sum. That will allow me to earn anywhere between 4 to 6% interest every year. And eventually, when I retire, CPF Life would give me a monthly payout every month. Also, here's a very interesting fact. Even though my FRS is fixed once I turn 55, my ERS is not fixed and will continue to go up every year. This means every year I can continue to top up even more money into my retirement account, which will give me higher and higher CPF Life payouts. Also, besides topping up my MA, SA or RA, another thing that I can do is make a voluntary housing refund to my ordinary account. This is to return the money that I've used from my OA savings to pay for my property. Doing so will not only reduce the money I owe to myself, which sounds weird when I say it out loud, but my money will also compound at up to 3.5% interest in my OA. This is very useful, especially when you turn 55, because once you have set aside your FRS, you can simply withdraw any additional amount that you have in your OA. So essentially, your OA becomes this high-yield savings account that gives you anywhere between 2.5% to 3.5% interest that you can withdraw anytime, which easily beats almost all the high-yield savings accounts that we have right now. Though, just take note that there's a limit to how much you can do this, as you can only refund up to the amounts that you borrowed for your housing. So it's not as though you can just park a $5 million into your OA and whap big, yeah. For the CPF section, for illustration purposes, I will just assume I'm 65 right now. So the income that I will get from CPF Life is $3,330 a month. Next, once we have settled our most basic foundation, which is CPF, we can then move on to stock investments. Now, unless you are very interested in doing stock research, there's probably no point to buying individual stocks and taking on all the extra risk. So personally, I will just go with VWRA, non-financial advice of course. VWRA is a broad-based ETF that invests in the top companies around the world, such as the US, Japan, UK, China, Canada, and so on. And the holdings are also diversified across various sectors. So I will get to reduce my sector concentration risk. This ETF is domiciled in Ireland, so my dividends will be taxed at a much lower rate of 15%, instead of the usual 30% if I invested in US domiciled ETFs. Plus, I will also get to avoid the estate tax that I will get with US domiciled ETFs. But then, I will usually get questions like, why not the S&P 500? Why not Singapore Banks or STI ETF? Or why not risk ETF? That's because when we go into any of these ETFs, we will usually be concentrated into one single country or one single sector. And that will increase our concentration risk, which we don't need, because we are $12.3 million richer now. Take for example, if we invest into the S&P 500, we will be focused on just the US companies. And even though US companies are performing very well now, in the past, they've underperformed against international stocks. As for why not Singapore banks or risk ETF for the dividends, similarly, they are concentrated in either the banking sector or the property sector, both of which can be very cyclical. In fact, if you look at history, different sectors will perform differently. So rather than just focusing on any one sector, it's better to just spread your investments across all the sectors. For this, I'll be investing $4 million into VWRA. VWRA accumulates the dividends instead of paying them out. So if I need any income, I will have to gradually sell my holdings. Otherwise, another alternative is to invest in VWRD, which is the distributing version of VWRA and has a dividend yield of 1.51%. Personally, I will still go with VWRA and sell as and when needed, since I don't really need the payout all the time, and I want to make sure that all my investments are always working for me at all times. But for calculation's sake, I will just assume I'll be getting a 1.5% yield from this, which will give me about $5,000 in income every month. Next, I'll be investing $4 million into Singapore properties, since historically, they have been known to be a safe haven for investors. I'll need a property to live in, so I'll buy a condo under my name, then buy another condo under my partner's name. As for which condos to buy, obviously I have zero knowledge about properties as compared to the pros like Eric Chew and Property Lim Brothers, so I'll just stay in my lane for this section. But based on the data that I can find, the average rental yield for a 2-bedder is 3.3%. So if I invest $1.5 million into the rental units, that will give me around $4,125 a month, which is not bad. But of course, I'm also ignoring the monthly installments here lah. Now, since a large chunk of my net worth is in the traditional finance world and I have some spare cash left, I will just park $500k into what I call financial insurance, specifically gold and Bitcoin. This is not the what big, but as an insurance policy just in case the financial world collapses one day, as unlikely as that may sound. Plus, it can also help to diversify my investments, especially during times of uncertainties, like right now. Last but not least, I can do whatever I want with the remaining $250,000. I could bring my family for holidays around the world to build unforgettable memories. I could invest in learning new skills or pick up something that I've always been curious about, or I could even use it to start a business. Because now I no longer need to work for money, I can finally pursue my passion projects without the fear of failure holding me back. So that's how I'll be spending my $12.3 million if I've won it. Anyway, that's all for this video. Hope you found this useful. Like, share and subscribe as I'll be posting new videos every week.